Hello, ladies and gentlemen. My name is Greg Michalowski from ForexLive.com. Today's date, October 1st, 2014. I'm going to do 5 currencies in 5 minutes. If you're lucky, you're going to get a 6th currency real quickly. So let's get going. Let's start off by taking a look at the euro versus US dollar. This is an hourly chart here. And what do we see here? We saw the market move sharply to the downside. Why? CPI data out of the Eurozone was weaker than expectations, especially on the core basis. It went from 0.9 to originally reported at 0.7. That was revised already to 0.8 because they had a calculation error. So it was still down to 0.8. The headline number was 0.3. Not very good. And that's going to be a problem for the ECB come their meeting time on Thursday. So we saw the euro versus US dollar move to the downside, and then we've seen a little correction to the upside and got it back above this trend line. Now, that's mildly bullish here, but and as long as the price can remain above that trend line overnight, we're going to we could see further upside potential here. But I would expect that there's going to be some good resistance up here against the 100-hour moving average if we do get up that high. We're going to watch this trend line. We're going to watch this trend line in between or before that 100-hour moving average. If we move below here, we're going lower. If we move above here, we're going higher, but look for sellers up here against the 100-hour moving average. Remember, Thursday's meeting is coming up. We also, let's take a look at the sterling versus US dollar. This currency pair, what do we have here? We went up and tested the 100-hour moving average, also tested the 50% retracement of this move to the upside. The market held that like a charm, and the market came down, down, down. And where do we find support against this old low going back to September 16th? This was the low correction after reaching our low here after this gap right here. Remember this gap, September 5th, we corrected up to that gap, came down, found support again against that level. Where are we finding resistance? Right against the top side of the gap here. That level came in at 31, or high price came at 28. It's pretty simple for this currency pair. Move above the 28 to 31 level and then get above the 100-hour moving average. If we're able to get above that, we still need to get above this ceiling right here, this yellow area right here, before we can move higher. There's lots of resistance up here in the sterling versus US dollar. If we can't get it, but if we can't get above the 31 level, look for lower levels, and we're going to be going through this low level right here. I'm a little bit more biased to the downside. Stay below the 100-hour moving average and see what happens with that currency pair. Okay, I said the next currency was the Aussie versus US dollar. We have some data coming out in the form of retail sales and AIG performance of manufacturing this evening, and so that's going to have an impact on this currency pair. Retail sales supposed to rise by 0.4. If it's better than expected, what you're going to look for is a move above the 100-hour moving average and this trend line, and staying above that level. If it can't get above that level, then we're just going lower. We're going to take out the lows here in the Aussie versus US dollar. We've been on a move to the downside here, and that's obviously looks a bit oversold, but trends are fast. Trends are directional. Trends tend to move in larger trading ranges, and if we do go out and take out the lows, we're going to be sitting there banging on the 2014 low at the 86.59 level, and if we break through that level, it's going to be further price action to the downside for the Aussie versus US dollar. So keep that in mind. The trend is still your friend, but on the upside, if we do get above the 100-hour moving average and the trend line, we do have the possibility to move up to the 200-hour moving average. Haven't been above the 200-hour moving average since September 8th, so that would be a significant resistance area, and I would expect that sellers come in against that level. Let's go to the New Zealand versus US dollar next, and on the hourly chart here for this currency pair, it's pretty simple. I put a Fibonacci just on the last leg to the downside, and we haven't been able to get above the 50% of just this baby move right here. If this pair is going to go higher, remember the Reserve Bank of New Zealand is intervening, or has been intervening in the market and talking down the value of the New Zealand versus US dollar. So it's under pressure for a reason here, but if it can't get above the 50% retracement of the 100-hour moving average, then the bears still remain in control for this currency pair. The 100-hour moving average currently comes in at the 78.65 level. That's going to be a level of importance in 78.32 or 33 is our first resistance level. Again, that represents the 50% retracement of this last leg to the downside, and we need to get above that level. If we move back below this trend line and start to take out lows and look for further selling to the downside. And the dollar versus yen, I think it went a little bit out of order, but what is key here in overnight trading is this 109.50 level. That represents a high here, a high here, a high here, and near the lows in the New York session here. If we can't get below that level and below this trend line and below the 100-hour moving average, the bulls still remain in control. If we do start to break below this, this would be our first level right here. Look for the bias to turn more to selling on any sort of rally, and we start to move down. And what's going to be key is a 100-hour moving average and then the 200-hour moving average. We haven't been below the 200-hour moving average since, not here, all the way back down to here. That is September or August 18th. That's a long, long time ago that the price has not been below the 200-hour moving average. Finally, I'm going to take a bonus one right here really quickly. The sterling versus yen. This is worth the extra minute and the extra bonus here. Why? Because this currency pair is getting narrower and narrower and narrower. It's coiling like a snake. The snake's about to bite. And so you have to, when it bites, it either breaks to the upside or breaks to the downside. Right now, we're just hanging around in the yellow neutral zone. Then we're going to get to the green zone, and then we're going to move to try to get above these, either below this low or above that high. I don't know which way it's going to go. All I know is that I think in the next 24 hours, this currency pair is going to be either higher, above this high, or lower, below that low. Maybe below this low. That's my guess. If you like this video and want to see more, please like it on our YouTube channel. Just hit the like button. You can also hit the share button. It gives us great feedback, and also make sure you hit subscribe. And if you want to see more Forex news and commentary, make sure you visit us daily at forexlive.com. That was about 6 minutes. Good fortune with your trading. Bye-bye now.